Welcome to Looking at the Markets with David Modell. We're back once again with my frequent guest, one of my favorite guests, yes, I said it, Mr. Seth Golden from the Golden Capital Portfolio and from PhenomGroup.com, which is open and ready for all comers. Well, maybe not all. Okay, there is a cap, there is a limit, but it is open if you want to get involved. And that link is on the screen right now and below this video in the description. So welcome back to Looking at the Markets, Mr. Seth Golden.
Thank you. Thank you for having me back, David.
Always great to have you. All right, so you released an article over the weekend that discussed the meteoric rise for the markets over the last month and the last week. So what do you think is giving rise to such, let's call it, exuberance in the markets? What do you think?
Yeah, it's a good word for sure. I mean, I think what were we up 5% last week, and some of since the year kicked off in the major averages. Yeah, I mean that's remarkable. It's just remarkable. I mean, some people hope to see that by the end of the year. Yeah. So far as in their returns. So let's say you were just invested in the indexes, be it the spiders or the QQQs. You're already doing really, really well to kick off the new year. And I think a lot of it, sentiment driven, but that sentiment has some real, underlying fundamental, proof or things that are going to be proven throughout the year. So far as corporate earnings growth are, this is going to be 2 consecutive quarters. Speaking, in terms of the earnings season kicking off, this is going to be the 2nd consecutive quarter that we're going to get double-digit earnings growth. And it's not just double-digit earnings growth. It's behind that double-digit earnings growth is actual revenue growth. And that's been lacking for, the vast majority of S&P companies, during this bull market cycle. So to see, and it's above 5% revenue growth. Okay. So, you have 2 really big tailwinds, that are providing strength to this market. It's real. It's real. You're getting repricing, for this optimistic outlook in the market. So I'm not gonna, I'm not one to say that, this is unfounded, or, this is the top because it's happening so quickly. I just think that, coming out of 2017 and into 2018, people are actually taking notice or recognizing, this earnings growth wasn't a one-off in the 3rd quarter. This momentum is just carrying through. So, you really just don't want to be on the sidelines, so to speak. And they're buying equities, at new record highs almost every single day. Yeah. Every single day. Yeah. You're getting new record highs. And, people are of the opinion also when they look at, some of the big banks and institutional analysts' projections of the S&P 500 this year, on average, I think, most are calling for 2,950 to 3,000. And we're brushing on 2,800, I think. So there's still room to run, So what if you got in a little bit early? That's what I think a lot of people's mindset is right now. So what if I get in early? We're not at 3,000 yet. If we're at 3,000 by the end of the year, I will have done very well. Yeah. There could be hiccups every now and again, but on the balance of the year, as long as I'm in the indexes before 3,000, I will have done very well. Yeah. So, I like it. And to be quite honest, I like the fact that people are investing, their capital based on real fundamental market momentum that has good underlying fundamentals. And this is even before we actually understand the implications from the corporations actually disseminate the implications or what they believe will come in the way of the tax reform legislation through their results.
Right.
So
Okay.
Yeah.
So it sounds like there may be some justification for this market melt up in progress.
Yeah, I believe so.
Yeah, it doesn't sound like you're going to call a top right now, or even a pullback anytime soon, or at least tell me if I'm right. There's no reason to believe that there definitely will be a pullback anytime soon. I mean, what would even cause one at this point?
Yeah, I don't know specifically what, or I shouldn't say I don't know. I mean, there's a host of different variables that can, produce a pullback. I released an article this weekend talking about the S&P 500 being at a 38-year high when it comes to the SRI, the RSI,
Yeah.
the relative strength index. I mean, when things get, move this quickly over such a short period of time, people kind of start paying attention to some of those metrics. And,
Yeah.
It may give them, if not reason to pause, definitely not, definitely reason to level set their modes of adding exposure.
Got it.
But, I think there could be some issue. I mean, we're July 19th. I think we have to have some January 19th. I think we have to have some resolution on the debt ceiling, and that's kind of tied up with the DACA debate, in the White House or on Capitol Hill. So those things got to get hashed out. And from what I'm, seeing, whether it's on Fox News, CNN, or ABC, worldwide news, there's bickering. There's a goodly amount of bickering going on right now.
Yeah.
So maybe that, plant some seeds this week, and you get some angst in the market. Maybe not. We also have the Fed Beige book on Wednesday.
Right.
So I think a lot of people will be, interested to see exactly what the Fed is thinking, through their notes. But yeah, look, any pullback, to be quite honest, if it doesn't show itself in consecutive days of maybe 1 to 1.5% in consecutive days, drawdowns, pullback, buy the dip. That's what I would be doing. I would be looking for opportunity to, buy on pullbacks. I think by and large, most people desire a pullback.
Yeah.
There's a lot of, to be honest, when you look at fund flows, I can't lie to people and say there's, all this kind of money on the sidelines. There's not. Right. But that doesn't mean there's still not money on the sidelines to be put to work.
Got it.
And I for sure would be putting money to work.
Got it. All right. I know I'm craving volatility, but I'm always craving volatility.
Oh, yeah.
I'm addicted to it. What can I tell you? So I want to talk about the Golden Capital portfolio, which has outperformed the market, to say the least, year after year for a number of years now. So I know you're managing millions in capital. So how are you putting that capital to work right now?
I'd like to say that I've done just as well as the market has in the first couple of weeks. But I kind of benchmark myself against the prior year. And unfortunately, volatility hasn't, even though the markets are just rising and rising, volatility has actually, last week, the VIX rose.
Yeah, it did.
And there's some good explanation for it rising because, as markets trend higher and higher, people, VIX being where it is and the derivative complex valuation being where it is, people are saying, look, if I am going to put more capital to work at all-time record highs on the S&P 500 and Dow and NASDAQ, I'm going to take out some protection as well. And they're doing it with the VIX. Sure. And there was a couple of interesting trades last week as well on the VIX complex. But so my core exposure, my major exposure to the market is in the volatility complex. And with the VIX going up, I short volatility. So I've still done well. I'm up, in the first couple of weeks, but I just because volatility hasn't tanked or decayed to the degree it did at the onset of last year, I'm not performing as well at the onset of the year as I did last year. But as the year progresses, of course, everything kind of equalizes in the volatility complex.
Yeah.
And I plan to do pretty well by the end of the year. So
I have no doubt that you will outperform the S&P 500 in short order. No worries. We're a couple weeks into the year, and it's an unusual situation with such a melt up in the indices. So it's hard to compete with that. So let's talk about some economic data, if that's okay with you.
Sure.
I know you believe at the root of the market's rise would be, well, corporate earnings. You mentioned earnings. So what are you seeing in the economic data?
Yeah, I mean, it's been, it starts with the consumer. We're a consumer-led economy. So I would say most of the consumer data, economic data that has been coming out has been just really, really strong. Last week we had, I think on Friday, the December monthly retail sales came out, and they showed I think it was a 0.4% increase month over month, and a really strong 5.5% year over year number. So this is just these are really strong results, and that came off of a November month that was really strong as well.
Yeah.
So the data, centered on retail and centered on the consumer, continues to come out really, really strong. And that's just providing that much more confidence to markets. Then there was the CPI. We had CPI and PPI last week, and both were favorable. Inflation just isn't there. And CPI did rise more than it had in basically a year, but it's not weak. It's just not concerning. From an inflationary standpoint, it's just not concerning. When the Fed has a 2% benchmark, inflation being where it is, there's just very little concern.
Yeah.
And you would expect at this point that some of the wage pressure should be filtering into the inflationary picture, but it's just been relatively tame. Even with all the headlines that you see about this company giving a bonus and this company raising their minimum wage standard, whether it's Walmart, Target, it's still not enough.
Okay.
Enough to actually move the needle. So you have really low levels of inflation. You have really strong consumer. Credit is rising. I mean, credit is it's on fire.
Yeah.
So these are all really positive economic indicators that I get there are some doomsdayers out there that say, well, it can't go on like this forever when it comes to credit. And that's true. But, with the backdrop of the potential tax cuts, layered onto this economic backdrop, it's hard to fight this data, in the market. You don't want to be a bear, or you don't want to be a bear for too long, at least. If you're going to be a bear, maybe you just, swim in and out of the channels. Bears tend to swim pretty well. You see them salmon fishing. Just try, a little lighthearted joke there. But
yeah.
If you've been a bear, you've just gotten your head handed to you over the last year plus. So.
Right. Wow. Okay. But what if things do go wrong? Like I might give you a scenario right now just to put you on the spot a little bit. What if we do start a decline? What if the market dives 2%, 3%, even 5%? What would that look like? Especially considering volatility has been almost non-existent recently.
2%, 3%. I would be looking at. I'd probably start, looking at ETFs first before I started digging into any stock-specific, areas of interest. just because, again, the backdrop for the whole year should be good on the whole. I guess what I would say to, the audience is, we're not even 1 month through the fiscal calendar year. It does not hurt you one bit to make sure you have cash on hand.
Yeah.
In the event that the markets pull back, you've got your golden opportunity, to put that capital to work finally that you've desired to for a long time. The only way the only reason I should say that I wouldn't put additional capital to work is if it was some kind of exogenous shock to the market. Something caused a financial shock and really disrupted the landscape of GDP. That's really the only reason. I would do so in a pretty strategic way, layering positions into the market, strategically monitoring liquidity levels. I would be of the opinion that 2, 3, 4, 5% pullback would see volatility ramp relatively quickly.
Yeah.
And for that purpose, I definitely want to have ample cash on hand to layer positions into, some of the ETPs, the VIX leveraged ETPs, VXX, UVXY, TVIX. I wouldn't necessarily go after the likes of SVXY or XIV because in that type of environment, they're going to suffer from beta slippage, and it'll take those instruments a little bit longer. Substantially longer to actually recover.
Right.
So I'd rather go with the double leveraged VIX ETPs, UVXY, TVIX, and the like. You want to pay attention to the headlines during such a pullback. You definitely want to pay attention to the headlines. See what's being said in the media. If there's any indication on institutional flows, you want to have that information at hand so that you're not actually, going into a 5% pullback that potentially turns into a 10% pullback.
Yeah.
And let's be honest here, the longer that this particular rally goes, the likelihood of a bigger pullback. It's just the way the market works.
Yeah.
Things catch momentum. The market catches momentum. And when it catches momentum, it doesn't like to relinquish it, all that quickly, as we can see in this bull cycle or over just the last couple of months. It just doesn't want to relinquish it. So if we start a downturn, be careful, surround yourself with good resources. It does not hurt to have Bloomberg, CNBC in the background to hear what everybody's saying.
Yep. And phenomgroup.com, of course.
Absolutely.
Had to put it in there. So we're talking about maintaining liquidity or cash, right? Have some cash, have some dry powder in your account for these eventualities. If you can afford it, shorting UVXY or VXX or TVIX might be preferable to going long XIV or SVXY. If you are ready for that type of risk, if you can handle it, if you know what you're doing. Gotcha. All right. It's not for everybody. We can agree on that. So S&P 500 forecasts. I know we don't like to make predictions here on looking at the markets, but if we had to, okay. I think most analysts are expecting or forecasting their predictions for S&P 500 year end. So this is your chance. If you'd like to make a little forecast, what would you say?
I think the average is around 2,950 to 3,000. Wells Fargo, I think they just put out their estimate last week. Theirs is really broad. 2,800 to 2,900 is their bookends. I think I'm comfortable agreeing with the average around 2,950. But here's the caveat, David, and as you well know, these get revised all the time throughout the year, almost every quarter.
Right.
The analyst will come out and revise their estimates up, down, or just reiterate. So I give myself that caveat as well.
Right.
I'll say 2,950 at this time, and but I guess I'll color it with some sentiment and say that there's a greater than 50%, so a majority chance, greater probability that it will overachieve that forecast.
Got it. So. Okay. All right. So it sounds like you might be on the bullish end of the spectrum as far as what the analysts have projected, but also in line with it. All right. And so far, even though we're just starting the year, what are your favorite stocks for this year, and how are you specifically playing the market right now?
I started the year looking at opportunities with stocks that have just been in a malaise. Apple was one of those. Facebook was another. Twitter actually had broke out last quarter, so I really liked how it broke out above the $25 level, then pulled back below $24. And it's been in that channel for the last 30, 60 days. So I've been playing. Every time it dipped, I bought it. Every time it ripped, I would sell it. So I did really well playing with Twitter. For subscribers at phenomgroup.com, we initiated a buy on Apple last week or the week before. And, it broke out just last week, and we were able to take profits on that trade. So I've been playing some of the bigger, more well-known names since the new year, and have done really well. I also like the opportunity in the oil patch, to be honest. When I look at the S&P 500 earnings expectations, if you look at Q4 alone, Q4 2017, which is about to be reported, the greatest earnings growth and sales growth is supposed to come from the oil patch. So, just kind of give folks, one of the investments. I do a lot of trading, but as an investment this year, we bought Anadarko Petroleum. We think it's going to be a really strong stock this year and show really strong fundamentals after a really, poor 18 months, let's say. And we had bought it at 54 or so. Also, this is on phenomgroup.com subscribers. And it's hit 59 already, so we were up 10% plus already. So, those are some of the investments that we're looking at and some of the trades that we've accomplished. We did start out the year adding to, so far as Golden Capital portfolio, we added to our core volatility exposure, short volatility exposure. We increased it by 1%. And I'm still not at my usual average of 20%. So I'm building into that slowly but surely. So that's how I'm putting capital to work. I'll continue to look for opportunities. We'll deliver all those opportunities that we see and that we feel are, have a greater chance of achieving I look for double-digit returns, with investments. I look for double-digit returns. With trades, I'm mostly looking for swing trade opportunities. But for actual investments like Anadarko, JCPenney. JCPenney is another one we bought, $3.45. Scott, it just rocketed over I think it hit 425 last week. We took some profits. We're still keeping a core position in that one because we have a much higher price target for the year. But there's another example of, a stock that we have at phenomgroup.com, very much outperforming. So,
yeah. And if you're watching this and you want to get a piece of that outperformance, you want to get involved, phenomgroup.com, link in the description below this video. It's on your screen right now. So just to wrap it up with phenomgroup.com, what's going on now? If people want to get in on the forums, which you're in every day, chatting in the forums, giving your advice and ideas and suggestions, and I'm in there all the time. And you got a great group of people forming already.
We do, yes.
Yeah. You got some regulars in there, and you can join the group and become one by all means. You got your trade alerts. That's worth the price of admission right there, I would say. And you've already made profits, some really nice profits as well. You've got the research, you got the latest financial news, you got ticker symbols and what's going on in the markets. So what else? What am I?
Yeah.
What did I forget to mention with phenomgroup.com? What's going on with it?
It's just we launched 2 weeks ago, just at the end of 2017, and we've been somewhat overwhelmed with the reception. We have new users every single day,
Yep.
new subscribers every single day. So it's a really good reception. Like you said, David, trade alerts, investment grade research, and investment thesis. The daily articles inclusive of what's going on in the markets today. I think you forgot to mention, all the video blogs and the halftime show that we do.
Yep.
These are all, this is a lot of content that you're trying to keep people up to date in the markets, familiarize them with some, key market indicators, fundamentals, and trying to put some just real, real focus on. Sometimes you kind of have to block. I said it's not a bad thing to have CNBC or Bloomberg on in the background, but there is sometimes that while you're hearing these headlines and stock-specific comings and goings in the news, you want to be able to filter out what's real and what's white noise.
Yeah.
A perfect example of that was Apple. I mean, there's so many headlines on Apple the last couple weeks with them throttling back, smartphone, handsets, and the latest news on adolescents being addicted to iPhones. None of that is really, key to the fundamental reporting of Apple. Right. It's just not, at least not near term, So. That's why we issued the trade alert, is we thought there was an opportunity there. Apple they've got tons of cash. They're going to have a pretty good quarter. We're still, we'll see what happens with the guidance. But for now, if you were selling Apple last, couple of weeks, you missed out on a big run, at a $5-6 run. So that's what, we try to do with our articles, is kind of hone in on what's real and what the investor should actually be focused on. We're very fundamentally driven at phenomgroup.com. Look, in many of my articles, you could easily say what, some of the pundits say is too much. The market's going too high. It's too quick. Yeah. You got to get out now. It'll eventually pull back. That may be all true, but the articles that we deliver, the content that we deliver, speaks to the broader picture. Yeah. We recognize that a near-term pullback may happen, but we let you know that over the balance of the year, your capital is in good hands if you've invested in the market, because the fundamentals are there. Right. So we don't feel like we should drive fear mongering or top calling in our content. Right. But one of the other things you had mentioned in our contributor forums, it is a special subscription. It's only $2.99, and I want to be clear as to why we charge $2.99 to participate in the forums, talk to other traders on the topics that are there and the stocks that are there. It's because we don't want people spamming, right. Coming on and, big dog athletic wear links to their website, things like that, or just, kind of denigrating other people in the forums. We believe that at $2.99, nobody's going to go out of their way to do that kind of thing and be charged at the same time. So it's a minimal fee, but it ensures that the forums remain about what they should be, which is subject matter and sharing ideas and information with each other. And we've had a lot of that going on since we launched. Some really good content, some really smart traders in the forum.
Absolutely. And what I like about the forums is that, like, if you want to get access to Seth Golden, sure, you could hit him up on Twitter at handle at SethCL, or on StockTwits at handle at Seth Marcus, but you only get so many characters. You can't really ask a super long question, and you can't get a super long answer necessarily on those forums. Right. Whereas if you pay that really minimal fee and then get access to the forums, you can have a more extended discussion with with Seth Golden. He's on there pretty much every day. And he's ready to help people who request it.
There's no character limitations. I mean, you can write a biography if you want in the forum. Of course, we're not looking for that, but yeah, there's no character limitations. You can put your links to support your ideas or the information that you want to convey to others in there, just like you can on any other forum. But yeah, definitely. I think a big advantage is we set up the forum so there's no character limitations. You don't have to do kind of the Sanskrit you don't have to do stuff like that in our forums. But I really do want to emphasize we have some very smart folks in there. They know the volatility complex inside and out. And to be quite frank, if people are sharing a trade idea, things like that, they disagree. We've seen disagreements on trade ideas or notions about a company's fundamentals. That's perfectly acceptable. That's the kind of stuff we want because it's value added. Yeah.
So look for the halftime reports that Seth and I do, updates on the market, and look for massive growth in phenomgroup.com. The time to get in is sooner rather than later because prices go up on these things sometimes, or room could they can only take so many people because we want a focused community. All right, so I think that's what they're looking for in phenomgroup.com. Seth, if somebody wants to email you, would they be able to do that and to get in on Phenom Group now? Could they do it? Yeah,
absolutely. They can email me personally at seth.golden@coollinksit.com, COOLINXIT.com, or you can contact Phenom Group, which is support@phenomgroup.com.
Got it.
Anytime. Again, what we deliver at phenomgroup.com we believe is very focused and advantageous to the investor community. Be you an institutional investor, because we do have institutional investors already subscribed, or just your everyday retail investor. I speak to tons of people on Twitter, tons of people on StockTwits. Come one, come all. Just understand that we're trying to deliver something and grow a community of investors for years to come.
Absolutely. And we'll be here for it. I'll be here. I'll be monitoring, and I'm involved. You'll see me in the forums as well, right there on phenomgroup.com.
You've had some really good articles also that you published on.
I'm an amateur writer, but I from a retail perspective. I ask the dumb questions that everybody else is afraid to ask. Okay, so Seth has got the massively researched, in-depth reports, and I'm more of I'm in and out quickly with my articles, and so I think we cover all the bases there, and I think it's great what we're doing here. So I'm looking forward to what's going to come in the weeks ahead. More melt up or meltdown? Ooh, we'll have to check back in a couple weeks and find out. Seth Golden has been our guest once again, looking at the markets. Thank you, sir, and can't wait to see what we have in the next couple weeks.
Thank you, me as well. Thank you, David.
It's different now.